Thank you, Jianlun. Okay, now we look at the next question. For this particular question, we have to look at the characteristic of the different funds. There are 4 different types of funds. First, we have the income funds. Next, growth funds, value funds, and lastly, short funds. For income funds, the main characteristic of this fund is that it yields high dividend yields. For growth funds, it has high capital appreciation, and for value funds, it follows shares that are considered to be undervalued. Lastly, for short funds are considered to be overvalued shares. Okay, so which are the investors which are interested in each respective funds? Okay, we first look at the income funds. Okay, income funds attract investors who are risk adverse and aim for long-term growth. Okay, why? Because most secure and stable companies offer dividends to their shareholders. Okay, these share prices might not move up much, but the dividends make up for this lack of respect. Okay, hence long-term investors stand to gain most from high dividend yield companies. Okay, now we take a look at the second kind of funds. Okay, growth funds. Which investors are attracted to this kind of fund? Okay, investors who seek risk but yet at the same time aim for short to long-term investments are attracted to these funds. Growth funds are actually diversified portfolios with no dividend payouts. Okay, companies usually reinvest earnings into expansions. Therefore, when they are expanding, firms' value will be more volatile. There will be more opportunities for high returns over varying investment periods. Okay, the third kind of funds we are looking at is value funds. Okay, value funds attract investors who are risk adverse, and value funds, same as growth funds, okay, they vary from short to long-term investments. Okay, unvalued firms have a lower risk of dropping in value further. Therefore, it's suitable for risk adverse investors. Okay, depending on market conditions, unvalued shares may appreciate in value either over the long term or short term, therefore attracting this kind of investors. Okay, for the last kind of funds, we now look at short funds. Okay, short funds attract investors who are risk-seeking, speculative in nature, and aim for short-term benefits. Okay, short-term funds will actually develop an opportunity for these investors to gain high returns within a short time in times of crisis when shares are not doing well. Alright, I've come to the end of this question. Thank you for your kind attention. For any questions, please ask Yonghui, Jianlun, and Yiren. Thank you very much.